Are you the owner of a limited company and unclear on your employment status and the tax that you have to pay? Well, stay tuned and we'll tell you everything that you need to know. Hi there, Nicholas Campion here from First Formations, the UK's leading company formation agent. If you're new to the world of company formation, you may be confused about your employment status when trading through your own limited company. You might be asking, am I employed or self-employed? How does this affect the tax and the national insurance that I need to pay? These are common questions, but it's actually quite straightforward once you get your head around it. So let's get started by discussing the employment status of company directors and shareholders. Now, when you become a director and a shareholder of a limited company, you are both an employee and owner of the business by virtue of these two roles. So even though you are running your own company and essentially working for yourself, you're not actually classified as self-employed for tax purposes. This is because, unlike the sole trader business structure, in which the person and the business are legally one and the same, a limited company is incorporated as a distinct and separate independent entity. In the eyes of the law, it exists in its own right and has an entirely separate personality from its directors and shareholders. As a director, you are an office holder and an employee for tax purposes, working for and on behalf of the company and its shareholders. In exchange for this, the company pays you a salary, which is taxed through pay-as-you-earn or PAYE. As a shareholder, you are a beneficial owner of the company. In exchange for holding shares and investing in the company, you are entitled to a share of any profit that the business makes. You receive the income in the form of dividends. The tax rates applicable to dividends are more favourable than the income tax and national insurance rates that you will have to pay on your director's salary. This is why most owners of small limited companies take a relatively low director's salary and higher dividends. It's an extremely tax-efficient way to pay yourself through a company. Now, let's take a look at the tax that you will pay as a director. Like most employees, company directors are also paid through payroll, with tax and national insurance contributions, or NIC, deducted through HMRC's PAYE system. For tax purposes, your salary is treated as earnings from employment, not earnings from self-employment. Depending on how much you decide to pay yourself as a salary, you may be liable to income tax and Class 1 NIC deductions. Your company may also have to pay Class 1 employers national insurance contributions on your salary. The company will make these deductions to your salary at source through payroll each payday and then send whatever personal tax and NIC you owe to HMRC on a monthly basis. Now, what about the tax you'll pay as a shareholder? Any money that you receive through dividends is classed as investment income, so it is paid and taxed differently from your director's salary. Dividends are paid from business profits, so your company will have already paid corporation tax on these profits. And consequently, you do not have to pay income tax or national insurance on those dividends. Instead, you are entitled to a £500 annual dividend allowance, which is tax-free. Above that £500, you'll enjoy lower rates of dividend tax. For example, 8.75%, 33.75%, and 39.35% in the 2024-25 tax year. The rates you'll pay will depend on the band of income tax that you fall into. Unlike salaries, dividends are not taxed at source. It's your responsibility to report and pay tax on dividend income through self-assessment. You'll have to complete a personal tax return each year and pay any additional tax that you owe to HMRC. So there you have it. Whilst not as clear-cut as being a self-employed sole trader, your employment status as a director and shareholder of your own limited company isn't as complex as it first seems. The company pays you a director's salary as an employee. If the business makes a profit, the company can also pay some or all of those profits to you in the form of shareholder dividends. The easiest way to get to grips with this is to avoid thinking that you are the company. It's your business and you may be the only person working for that business, but you are not self-employed. You are working through the company. And that company is a separate entity with its own legal personality. If you have any questions, please leave them in the comments section below and we will get straight back to you. We've also included useful links in the description below to gov.uk guides and First Formations blogs. Finally, be sure to subscribe to our channel to get more tips and advice on limited companies, reporting requirements, tax obligations and more. We're always happy to help and we can't wait to hear from you. Until next time, cheerio.